We're joined today by Avalara for our educational webinar series by Matrix Integrated Solutions, episode 15. Today, we're going to walk through NEXUS 101 with Alex Lyons from Avalara. She's going to talk about how NEXUS is kind of an impact on us as Sage 100 users and how we work with Avalara to solve those challenges. Alex, do you want to take it away?
Yeah, thank you so much, Jeremy. I appreciate it. So my name is Alex Lyons. I'm a senior sales executive here at Avalara on our Sage team. So I have been working with Sage customers for about 5 years now. Honestly, primarily Sage 100 users. So I have a lot of experience with working with customers who are, wholesalers, distributors, people who maybe aren't dealing with sales tax in the most typical way that you would expect customers to deal with sales tax. So the point of this presentation today is to sort of bring everybody up to speed on some of the sales tax changes that have been happening over the last few years. There has been a lot that's gone on that is affecting, not only businesses that are selling direct to consumer, but also businesses that are selling wholesale, manufacturers. So there's a lot that's going on, and a lot of the customers that I'm talking to every day are sort of in situations where they aren't aware of these changes. And so hopefully through this presentation, we can kind of bring to light some of the updates that might be affecting your business. And then I'll kind of talk a little bit about the challenges that I'm seeing the customers that I work with on a daily basis, what they're kind of experiencing as a result of these changes. And then through that, also talk a little bit about if these things are affecting you, kind of how you can work to fix them. And so what the path to compliance sort of looks like if you do need to make any adjustments to how you are set up from a sales tax perspective. So, the first thing to note is just the complexity of sales tax is growing and changing all the time. You've got different states that have all sorts of different rules. The Wayfair ruling, which may sound familiar to some of you, happened back in 2018. It was the state of South Dakota versus Wayfair, the furniture company. Ended up being a precedent-setting case that essentially made it where the states were allowed to implement economic thresholds. And so traditionally in the past, where a business needed to be registered for sales tax was simply based on where they had physical locations. That has changed a lot. And then we also have seen the introduction of economic nexus through the Wayfair ruling in 2018. And so those two factors are something that comes up a lot on calls with my customers. So I'm going to talk a little bit more about that as we progress through this today. Also, the rules around those two pieces are constantly changing, especially now that we're kind of in a post-pandemic world. The states have, lost revenue, just like a lot of businesses have lost revenue. And so these rules are changing so that they can sort of take advantage of trying to recoup some of that lost revenue. And then, with all of that, the cost of compliance is increasing. It's costing businesses a lot more to try to keep up with all these changes and make sure that they are in compliance. The other problem is that compliance, unfortunately, is not optional. So proof of compliance is a burden that rests on you as a business. It does also apply to exempt sales for the most part. Once an auditor sort of gets a whiff that you're out of compliance or that you can't prove otherwise, you can kind of expect regular visits. I have lots of companies that call us as a result of an audit that's maybe not going so well. So I always encourage people, if you're in a situation where your status from a NEXUS perspective hasn't been evaluated, it's a good thing to sort of have that conversation before an auditor comes knocking, because then you have a little bit more in terms of options on handling things, which I'll talk a little bit more about that too. But once they start, they're not going to stop coming back. And then also, with the compliance, back taxes are something to think about. It's just sort of a portion of the overall cost. You've got penalties, interest. A lot of the states, if you haven't filed tax correctly, have penalties that range anywhere from 20 to 50%. So it can get really expensive if you are not keeping up with this. So again, it's really a good idea to sort of, have an evaluation of this before somebody comes knocking. And a question I get a lot is about, why is this happening? Why are all these changes occurring? And ultimately, it has to do with the states losing money. Sales tax on average makes up nearly 50% of state tax revenues. They're losing about 13 billion from uncollected tax on e-commerce sales alone. And throughout, COVID, since middle of 2020, a lot of my customers who were traditionally wholesale or just distributors have been adding e-commerce to the mix. A lot of people make the assumption that only e-commerce businesses are affected by these NEXUS changes. That's definitely not true. However, it does have a big impact on things, and it can definitely make things a lot more complicated and more expensive if you aren't acknowledging, new places that you maybe need to be registered. So ultimately, I tell people all the time, people have lost a lot of business and a lot of money throughout the last couple of years, and so have the states, and they're trying to recover that revenue, and they're doing that through these changes. The economic nexus has made it a lot easier for them to come after businesses, and now we're at a point where we're 4 years post economic nexus being introduced. So we're also seeing auditors being a lot less forgiving in terms of businesses that have not yet made the right moves to get into compliance. You've also got, rapid growth triggers and tax challenges. I've got lots of customers who are growing in different ways, trying to, figure out ways to navigate the pandemic and how to sell and how to stay in business. And so through that, I've seen a lot of people adding new ways of selling, new territories, different mergers, acquisitions. I've seen a lot of companies that have been acquired by bigger companies and are out of compliance and trying to sort of catch up so that that acquisition can go through. So there's a lot of different factors I've been seeing over the last couple of years that are making this, sort of a top of mind discussion. And usually what we're talking about when I have a first call with a Sage 100 client that's calling in to talk about sales tax, we're talking sort of about where do you stand from a NEXUS perspective, and has this been something that maybe you're missing something, and so that we can help you figure out how to navigate getting into compliance. So this is just a list of some of the common NEXUS creating activities. I'll just pause here for a second. Any one of these listed activities can create NEXUS. I always just, ask people to take into consideration big changes that have been happening in the business so that we can talk about how maybe that is impacting where you need to be registered for sales tax. And I know I've mentioned already a few times, but, adding an e-commerce aspect to the business, adding employees that are working remotely. I know that's a big thing, now that we're living in a world where people maybe have shut down their offices. You've got more remote employees, people having the flexibility to work from anywhere. And something a lot of people don't realize is that if you have an employee living in an outside state, that is an automatic NEXUS trigger from a physical NEXUS perspective. So that's something I've seen a lot. Also, Amazon sales are something that I see a lot. Fulfillment by Amazon is something that usually requires them to store your inventory in their warehouses while it's still technically under your ownership. So that's something I see a lot as well. So, I just encourage you to kind of take into consideration, if you have had any big changes to your business, how this might be impacting where you need to register.
Alice, quick question for you.
Sure.
This might be a kind of a silly question. Can you define NEXUS for us?
Absolutely. Yeah. So NEXUS really just means where a business has an obligation to register and remit for sales tax. So it's as simple as that, wherever your business has an obligation to be dealing with sales tax. Typically, you're going to have an automatic NEXUS wherever your business is located. Anywhere you have physical locations, if you have offices or warehouses, those are sort of the obvious ones. And then obviously this list here is a little bit less obvious to some people. Trade show attendance is a big one that hasn't been as big in the last couple of years, but it's something to definitely take into consideration. If you have people within the business that have traveled for trade shows, the states do view that as a physical NEXUS trigger. The reason for that being that if they kind of consider you're in their state working to generate business for your company. And so they consider that a way of creating physical nexus. Also, just any travel that employees are doing if they're visiting clients on site, for sales presentations or installations, anything that is putting an employee in another state on behalf of the business is something that can create a physical nexus. And then I'm going to talk a little bit more about economic nexus in the next slide as well.
When you talk about nexus from a location like a trade show or traveling salesperson, are there limits? You have to report it and you have an obligation to it, but you may or may not owe because the limitation of sale in that region, or is it just automatically taxed at whatever the rates are?
For the most part, it's automatic. If you are going to a trade show in another state, and you're advertising for your business there, that is generally considered a physical nexus trigger. There are some states that have nuances around that law. I know Nevada. I know Vegas is a big trade show area. So in Nevada, there are some nuances with their laws around how long you're there, as to whether or not you actually have to get registered there. But for the most part, yeah, just simply being there is enough to warrant physical nexus. Now, of course, when we have these conversations with businesses, it's very tailored to your business and what makes sense for you. So just because maybe you went to a trade show, in California, if you're not really selling there much, you may not have enough risk to warrant the cost of getting registered in the state. And that's always something you have to take into account. There's a lot of gray area when it comes to this stuff. So ultimately, the goal when we're working with customers is to help them figure out where they have an obligation to be remitting and filing their reporting to. But at the end of the day, it's always a business decision on where they are actually going to get registered and if it makes sense for them to do so. Also, risk tolerance is a big aspect of this. A company's risk tolerance is going to vary. Some people might be really conservative and want to register everywhere they absolutely have to, while other businesses may say, if we don't have enough liability in a certain jurisdiction, we may decide not to register there, even though from a legal perspective, we need to. So there's a lot of gray area. It's all very case by case. And I would just encourage, if you have questions about this, to schedule a consultation with myself, so that we can sort of talk through your exact situation and figure out maybe what the best approach is.
Great advice. Thank you.
So, physical nexus was the last slide. Here I want to talk a little bit more about economic nexus. So economic nexus has really been what has rocked the sales tax world in the last 4 years, because obviously we live in a world where people are shipping, and they can, that can expand your business anywhere through shipping. And so a lot of the states were losing out on a ton of revenue based on the fact that just because a business wasn't physically in their state, but they were able to ship into their state, they weren't having to collect sales tax. And so with economic nexus, it has made it so the states can set at a state level what they deem as substantial economic presence. Every state has a different threshold. You can see out here on the right side of this slide some of the examples. Some of the lower thresholds are $100,000 in sales. Some states look at transactions. So if you have 200 transactions or more, that can trigger economic nexus. And then some of the bigger states, California and Texas, they're $500,000 in sales. So it's a lot, a lot higher of a threshold. But ultimately, it's just something you want to keep an eye on. I also like to iterate that you have to keep in mind that economic and physical nexus, whatever happened first is your trigger event. So if you have physical nexus, in a state due to an employee being located there or because you've been traveling there for work for years, you don't need to worry about the economic threshold because you already had nexus due to the physical aspect. So it's whatever happens first is your trigger event. And once you've established nexus, you have it and there's not really any going back. So something that we help businesses evaluate is sort of what that trigger was, so that you can determine how long the nexus has existed. And I'll talk a little bit more about that process here in a few slides.
And when it comes to manufacturing distributors around economic nexus, you know, if they're not dealing with the end user, but they're shipping,
Mhm.
it's going to be an impact to them, and these thresholds would take place.
Yes, yes. So the majority of the states, 30 some of the states, actually, I can't remember if it was 32 or 34 of the states look at your gross sales. So that means that this is absolutely impacting businesses that are not selling direct to consumer. So even if you've never had to deal with sales tax before, because all of your customers are exempt and they're providing you with a resale document or an exemption document of some kind, you still have an obligation to get into compliance, because if you've created Nexus, they want you filing in that state, and you have to prove why you're not charging sales tax. And so you do that through managing your exemption documents. And so without being registered in the right places, it can definitely be easy for those documents to sort of slip through the cracks. So, you know, a lot of my Sage clients can't, the way that all this impacts them is a lot different, because most of it does come down to managing exemptions better, not necessarily collecting sales tax. But a big thing to remember is that these thresholds, physical and economic, impact you whether or not you are selling to an end user.
Thank you.
So, you know, here, some of these common triggers are the same as the physical triggers that we looked at before. These are some of the common triggers we see for economic nexus. You know, change in ownership, the e-commerce growth is a big one I see with a lot of my clients right now. The brick and mortar locations are something that sometimes gets overlooked. So there's just really the easiest way to think of it is, if there's any big change happening to the business, it's a good thing to have a conversation and figure out how this is impacting your sales tax compliance, so that you can make sure you're doing the right thing and not falling behind. So to kind of speak to Jeremy, your question, you know, before, I get this a lot, you know, most of my sales are exempt, so I don't have a sales tax problem. But this is really the main thing, like I'm saying, I deal with my customers, is helping them figure out how to handle exempt transactions. You have to, if you have a nexus in a state and you're not charging sales tax, you do still have an obligation to prove why you're not charging sales tax. And you do that through managing your exemption documents from your clients. Most of the customers I talk to are pretty honest and say, you know, look, we have not done a good job of managing our exemption certificates. You've got salespeople collecting them, and they're just trying to get the deal closed. And maybe they're not collecting or being diligent about what they're collecting from the client. You've got, you know, people who are storing these documents physically, and they haven't been updated in years. There's a lot of mistakes that can be made around exemption document management. And this is really very important. If you have an nexus in a state and you're not selling to an end user, you have to have the right exemption documents on file, so that if and when an audit happens, you can prove why you have not been charging sales tax.
Yeah.
So these are just a couple of examples, you know, of clients that we've worked with in the past and how economic nexus has impacted them, even though they weren't selling to direct users. You know, manufacturer in New York went from being compliant with less than 75 certificates on file to all of a sudden needing over 1,000 certificates to prove that they were doing things correctly. And so 99% of what they were selling was untaxed, but all of those documents were not necessarily managed correctly, and they needed so many documents that this really changed, you know, how they needed to work to stay in compliance. And then another company, a national wholesaler who used drop shipments, went from needing only about 500 documents to needing more than 5,000. So it very quickly, through economic nexus, made managing these documents sort of an impossible task, because they didn't have, you know, teams of people to keep up with this. So this is something that we help businesses navigate, you know, with figuring out, are you impacted by the economic nexus changes? And if so, what does your document management look like? You know, what do you need to do to collect these exemption certificates so that if and when you get registered or an audit happens, that you are covered? This is where it gets really confusing. You know, the more states you add, you know, sales tax, the first thing you think about is all the rates that you have to charge. And so it's very obvious, you know, when people have to register in multiple states and they're selling to end users and dealing with actual sales tax, it's really obvious to point out the pain that they're going to be experiencing trying to keep up with all those different rates. It's less obvious about the exemption certificates, but the reality is that every state has different documents that they require to prove your exemption status or your customer's exemption status. They all have different expirations. Florida, for example, has a resale document that expires every single year. So you have to get a new one every year. So it's really complicated to try to keep up with all of the rules around this, and also just making sure you're getting the right thing from your customers. You know, I have people tell me all the time that they ask people for this document, and they've got people sending them forms for the DMV, all sorts of random documents that are not an exemption document. You've got people providing a tax ID maybe, but without the actual physical document to back it up. And so it's really difficult to keep up with, you know, what you're collecting from each customer, making sure it's correct. And once you're registered in a state, this is on you. So it's not on your customer, it is on you to make sure you have the correct document. Another aspect that makes all of this very complicated is the more states you're having to register in, the more returns you're having to file. A lot of states are requiring monthly filings, even for companies that aren't necessarily dealing with a lot of sales tax. I have so many customers that are filing $0 returns on a monthly basis to multiple states. And so this is really just something that's very time consuming. You're having to go to each state website and figure out, you know, filing every single month, having to pull reports out of Excel and out of Sage and getting everything consolidated so that you can do it. It's another big challenge trying to actually, once you've charged the correct rate, if you need to charge a tax or manage the document, then you have to actually file and report back to the state, you know, sometimes on a monthly, quarterly, some states do annual filing as well. So it just is another aspect that's creating, you know, a cost from, you know, you having to spend a week of the last week of your month just filing returns. It's not something that's generating revenue for your business. It's just time consuming and difficult. So to kind of wrap this up, let's talk about how you can address all of this. If any of what I have said has resonated or created any questions for you. Generally speaking, where I start the process from a compliance standpoint with every single customer I work with is we typically are doing a risk assessment. The risk assessment is essentially a process that evaluates where your business stands from a NEXUS perspective. It identifies if there are any states that you need to be registered in, either for physical or economic NEXUS. It's going to evaluate what your trigger event was. So was it the economic or the physical aspect? The reason we do that is to figure out how long you have potentially had NEXUS in that state. It's really important to figure that out because then we want to look at your exposure if there is any. So we look at the amount of time you've had NEXUS, and then we look at how much you've sold into those jurisdictions over the amount of time that you have had it, so that we can determine if you have any tax liability. The good news for a lot of my Sage clients is that a lot of what may look like tax liability on paper is actually something that would be covered up by the collection of an exemption document if you don't have the right one on file. So that would tell you you need to collect certain documents to make sure that before you get registered in a state, you know, that you have documentation to back up why you weren't charging tax up until that point. If you do have true tax liability and you haven't been filing and reporting appropriately, there are paths that you can take to kind of eliminate some of the costs associated with getting into compliance. So there's a program called voluntary disclosure that we can help you with that would guarantee penalty and interest abatement. It also limits your look back period so that you don't have to pay all of the tax that's due to the state. So we would work with you throughout this whole process. The risk assessment tells us a lot. It tells us about where you're missing the mark. It tells us how you need to proceed with each state. We have a tax advisory team here internally that would help make a recommendation for how you get registered with the states. And then the other really great news is that we have a software that helps to manage all of this from there on out. And so all of the challenges I've sort of talked about throughout this presentation, our software will eliminate a lot of those challenges. So we have a cloud-based solution that is going to tie into Sage 100 and allow us to override the native tax functionality in Sage. So that if you're in a situation where you have to collect tax, we have the ability to automatically keep up with all of the rates, calculate tax within your invoices. We also have integrations into most of the commonly used shopping cart or e-commerce solutions. So if that's something you're using, we can also help at that level. We have a tool that is very, very important for a lot of my Sage customers called Cert Capture that helps to manage your exemption documents. It helps to make sure you're collecting the right documents for each state, for each client, helps to manage your expirations and keep you on top of that. And then we also have a way of actually filing and remitting your reporting and returns back to the state on your behalf. So we can fully automate filing your returns. So it's sometimes scary to think about getting into compliance because of all the work that may come as a result of that. But the reason I'm kind of bringing this up, we can help you figure out where you stand from a compliance standpoint, and then we can also help to automate that compliance once you've figured it out.
So it seems like if you kind of spark some interest, because I think you hit some key points around the COVID changing the business structure of late, and remote employees selling more with the web, shipping more. Those questions probably sparked a lot of concern and thought around our client base. If they look to you to do a risk assessment, what's the cost of that risk assessment?
Sure. So we have two different versions of our risk assessment. Very business to business on which we recommend. We have a version that costs $4,500 and we have a version that costs $8,500. And right now, any of the customers that come to us as a result of watching this presentation and our partnership with Matrix will receive 25% off of both of those assessments. So, what I would typically say is if you're in a situation where any of this has sparked even a single question, to let's schedule a consultation and talk a little bit more about your business specifically to determine which risk assessment is the best one for you to start with, if any, and then how we can kind of help you from there on out.
And do they, just so we know from a logistical standpoint, do they contact us and we contact you, or do you like clients that contact you directly?
I would say they can contact Matrix and everyone at Matrix. I work really closely with the consultants at Matrix, so they can get you over to me, or my information is in this presentation. You can reach out to me directly and just note that you're a Matrix customer, and I'll loop in your account manager at Matrix as well, so we can make sure you get that discount. It doesn't matter either way, it's fine.
Excellent. I appreciate your help and interest in our client base.
Absolutely. Any other questions you can think of, Jeremy?
I think that'd be it.
Okay. Well, I thank you. If you have gotten this far, I really, really appreciate you taking the time to listen. And I hope that maybe this has helped a little bit to either ease your mind. And if it hasn't eased your mind and it's created questions, then, I always say, please don't panic. Instead, let's just schedule a call. Let's talk about your specific situation, and then let's come up with a game plan, because a big part of my job is helping companies navigate where they stand from a compliance perspective. And most of them are not calling because they're in compliance. Most of them are not in compliance. And so that's what we do as a business, is help, companies navigate compliance and then figure it out day to day so that you don't have to take on a bunch of extra work.
I think that realistic approach to say, maybe we're not in compliance, but what's the risk of not being in compliance, and understanding just the reality of the situation is kind of key to that follow through. So really appreciate your time, Alex, and any questions that you have around Avalara and Matrix, please feel free to contact Alex directly, and her phone numbers earlier in this presentation, or you're more than welcome to contact me and anyone at Matrix to kind of assess where you're at and get that ball rolling. Really appreciate your time, and thanks again, Alex, for teaching us about NEXUS.
Thank you so much, Jeremy. Appreciate it.